So earlier today, President Trump sent out more tweets, and again, he's talking about rate cuts, and again, he's talking about QE. He also mentioned the dollar, and I'm going to tell you why he's mentioning the dollar, but it seems that he's demanding a lot more rate cuts than even in the past. And I'll tell you exactly why. So when you look at the trade-weighted dollar index, and if you're not familiar with the trade-weighted dollar index, I've been covering this more than pretty much anyone else in the gold community, pretty much anyone else in the alternative media. And yes, the Federal Reserve monitors both dollar indexes. They monitor both the regular dollar index, or DXY, and they also created the trade-weighted dollar index, which is their own creation and measures the dollar against a trade-weighted basket, which is changed, I believe, every year. It's reweighted, and it weighs the dollar against 26 other currencies, at least 26 other currencies, and that tends to be a better measure of the dollar versus more emerging markets. Well, guess what the trade-weighted dollar just did today? The trade-weighted dollar, as of today, on the St. Louis Fed website, which monitors and tracks this, is at 129.9088. According to the chart I'm looking at on the max, it is at all-time highs. Okay? The trade-weighted dollar was not even this high in 2002. The last time it got this high, it's been testing 129 in the past. Recently, it got up to 128, 127, 128. It was getting close to all-time highs, and it did not break all-time highs. But now, according to the max chart, it looks like the trade-weighted dollar is finally above all-time highs. On March 6th of 2002, it got to 129.425. So that looks like that was the highest it's been in the... Okay, wait a second. There's one more. 120 on January 30th, 2002, it got to 129.8310. So I'm running it along the top here, and now it is above that. So the dollar index is... The regular dollar index is at 98.24, and remember, that's mostly against G6, G7 currencies. That's the dollar against the euro. And we know what the European Central Bank and the European Union want. They want further negative rates, rate cuts, QE, while President Trump now wants a 100 basis point rate cut. He wants rates cut 1% rapidly. So I'll read the tweets. There's two tweets. So the first tweet was... Our economy is very strong despite the horrendous lack of vision by Jay Powell and the Fed, but the Democrats are trying to, quote, will the economy to be bad for purposes of the 2020 election. I think this goes along with what Bill Maher has been saying. Bill Maher has been saying for over a year now that if the economy crashes, that would help the Democrats. But a lot of the mainstream media has not really gotten on board with what Bill Maher is saying. Trump continues, it's very selfish. He says our dollar is so strong that it is sadly hurting other parts of the world. So I'm sure that President Trump, the Trump administration, the U.S. Treasury, and the Federal Reserve, which is looking at the trade-weighted dollar index, is very, very worried. I know for a fact that I've heard from other sources, whether it's other people's work I follow or my contacts here in Washington, D.C., that a lot of central banks outside of the United States, especially emerging market ones, constantly call the White House, constantly call the Treasury Department, constantly call the Federal Reserve to complain. So the Treasury Department's head of governments, head of state, and central banks in other countries routinely call and complain about dollar strength. But that is their own fault, in my opinion, because a lot of these countries, and I've covered this at length, have the amount of borrowing, the amount of debt in dollar-denominated debt has exploded. Okay, let me read the second tweet now from President Trump. His second tweet today was about this topic was the Fed rate over a fairly short period of time should be reduced by at least 100 basis points. If you're not familiar with what that means a 1% rate cut very, very quick. And why? Because all these governments are doing it. Okay, we are in like the death spiral, the crazy race to the base of beggar thy neighbor, trade war, currency war, things are escalating. Okay, last night I saw a story, Australia is going to extreme measures, and the Australian Reserve Bank, which is their central bank, they're in crazy rate cut mode. In Australia, the Reserve Bank has cut to 1%, and, quote, nobody expects them to stop cutting, end quote. So Australia may go to, they're not at ZERP yet, they may go ZERP or NERP, And then China just announced recently that they're creating a new interest rate. The People's Bank of China just announced today, I saw it on Bloomberg, a new interest rate benchmark, the PBOC, and they're trying to lower interest rates so to get more people to take out credit inside China to start borrowing. So all this is cascading. All these central banks are all in competitive rate cutting, competitive devaluations. No one wants a strong currency. Absolutely no one. Okay, let me go back to the tweet here. So Trump, I'll reread it. The Fed rate over a fairly short period of time should be reduced by at least 100 basis points, with perhaps some quantitative easing as well. So if you're not familiar with Trump, and if you really want to understand Trump, you want to get into how he thinks, The Art of the Deal is a good book. The other good book, and I've read this book, is Think Big. Make it happen in business and in life. He does not do anything in small increments. Okay, think big. Or bigly now. B-I-G-L-Y, bigly. So he is thinking bigly. When he was a commercial real estate developer, it was, what is the max amount I can borrow from the banks? Not what is a reasonable amount that will not bankrupt me. It was, what is the max amount? Leverage to the hilt. Go big or go home. And it seems that same mindset is what Trump is now bringing. Okay, back to the tweets. I'm a little off tangent with quantitative easing. So Trump is pounding the Fed, trying to lobby for more rate cuts as soon as possible. And there's even a lot of people on Wall Street saying that the Fed should do another 25 basis point rate cut, more measured one in September. So back to Trump tweets, if that happened, our economy would be even better and the world economy would be greatly and quickly enhanced. Good for everyone. Just crazy stuff, guys. And Larry Kudlow did another spin interview yesterday. National Economic Council Director Larry Kudlow. And he went on Fox News, I think, yesterday, reassuring people about the economy, more spin jobs. Oh, yes. Good for reminding me. I see in the comment section. So not only does Trump want the rate cuts, this massive rate cuts, because his 25 basis point rate cut wasn't enough. He initially wanted 50 basis point rate cut, right? Now he wants 100 basis point rate cut as soon as possible and QE. But Trump has also talked about another 10% tax cut for the middle class, which means that it won't benefit me because I'm self-employed and I don't make at least $60,000. So the Trump tax cuts really are only designed to benefit self-employed people making between $60,000 or $65,000 and $150,000 who are self-employed, and then also small business and corporations. If you're not in any of those things, you don't really benefit from the Trump tax cuts. So Trump, not only is Trump now, it is go big or go home. It is full all-in bigly, trying to weaken the dollar, trying to go for stimulus or what infrastructure projects, whatever plans he has. And not only is he talking about 100 basis point rate cuts, implementing QE, but another 10%. It just came out in the last 20 minutes before I hopped on here. Another 10% tax cuts for the middle class. And everyone's not going to benefit. I did not benefit from the Trump tax cuts. I actually owe still a $1,200 tax bill, not to the IRS, but the Social Security, because I'm self-employed and I did not make $60,000 or $65,000 per year. Andrew asked, Jason, what's your take on the dollar? I've talked at length about this, that the dollar and gold could both rise. But if the dollar continued to rally, and I've talked about how the Federal Reserve is walking a very dangerous tightrope, trying to manage the dollar index and the trade-weighted dollar. So the trade-weighted dollar is measuring the dollar against emerging markets. And the trade-weighted dollar, where it is now, is very, very bad for emerging markets. Emerging markets have a lot of dollar-denominated debt outstanding. And you know what? With the dollar where it is on the trade-weighted dollar index at all-time highs and about to break out to 130, it's very, very close. Breaks out to 130, 130, 132, there's going to be defaults in the emerging markets. It's going to be bloodbath city. So that's probably why Trump, I'm sure the phones are ringing nonstop at the Treasury Department in the Trump administration from foreign emerging market governments, emerging market Treasury Departments, emerging market central banks. It is in full-on panic mode. And you will not hear a lot of people in the gold community or alternative media. A lot of people talk about the dollar index. They do not watch the trade-weighted dollar too. You got to watch both. And I've covered this. There is, in non-bank financials, according to the Bank of International Settlements in the latest report, there is $11.8 trillion in total dollar-denominated debt outside the U.S. Okay, it is a big increase since 2008. I don't know how soon it will be until the Fed begins buying other assets. It depends. Enough people there has to be enough pain. There has to be a pain point where the polling will show it. Where the polling of the people, a lot of people who have retirement accounts will be okay with it. The only reason a government wants to implement a 50-year or 100-year bond is to steal from investors and inflate it away. Look what Argentina just did. I covered this in the last couple days. Why Argentina issued 100-year bonds at 7% interest. And here we are 3 or 4 years later after the bonds were issued. There was big demand for the 100-year bonds at 7%. And the official Argentinian inflation rate was like 55%, give or take. And 3 or 4 years later, the principal or value of the bond is already down 50-something%. This is why governments want to issue 50 or 100-year bonds. This is why Japan is considering issuing a 50 or 100-year bond. It was discussed in 2016. That's one of the reasons why Ben Bernanke went there. And then Ben Bernanke was talking also about zero coupon perpetual bonds, which is basically pure theft. You don't get any interest payments whatsoever on a zero coupon perpetual. Exactly, and the Fed and all central banks. It's not going to happen anytime soon, but central banks need to take blame for causing these crises and exacerbating the wealth gap. They're totally gutting the middle class. And also taxes is gutting the middle class. A combination of currency debasement and monetary inflation and credit by the central banks, fractional reserve lending, and then taxes layered on. Soon there won't be any more middle class at all. Okay, so let me see if there's anything else I wanted to talk about. So you've got all these governments all trying to, whether it's an emerging market with net capital outflows, and then that emerging market Treasury Department is trying to devalue their currency. That central bank of the emerging market wants to do rate cuts, maybe even QE. Everyone is trying to prevent their currency from rising. But the dollar is the one who's taking the brunt of this. This wouldn't be as bad if the whole global economy hadn't overborrowed in dollar-denominated debt. I wouldn't call it a shortage of dollars, Sean. I actually got two super chats. Thank you very much from Wish and Whim Jewelry and Mark Delgado. Thank you very much for the super chats. Oh, by the way, guys, there is one channel called like Economic Times. I don't think that's its real name, but they take all my content and they have the comment section disabled and they repost all of it on their channel without my permission. So if you see that content on there, as a favor to me, please just hit the red flag over on that channel and report them for copyright infringement. That is just ridiculous. They didn't I think in the past, a couple years ago, they asked me for permission to repost my content and I said no, and they're still doing it anyway. That's taking money out of my pocket. That's taking food out of my mouth. Straight up stealing my content without my permission and reposting it as their own. And then putting it like in the Zero Hedge comment section of articles. It's very unethical. This is my primary source of income now. So for my Patreon and my PayPal, my 100+ Patreon contributors, the half dozen or so people who are my PayPal contributors, I think the channel labels itself Economic Times, and they don't repost the article saying Jason Burak analysis or anything. He reposts the title, but it's all my audio. No, I'm not registered anymore. I don't do investment advice. I don't have my Series 7 or Series 66. I had it a very long time ago, about 10 years ago. I don't do that stuff anymore. I only give my opinion. I don't know what the full name of the channel is, but it says Economic Times, but it could be labeled something else in the URL. But one of my good friends told me that they're reposting my content without my permission, and they have the comments disabled. It's really messed up. They've been doing it now for a while. So I thought I'd bring attention to it. Thank you very much for the other super chat. Silog, if I pronounced your name correctly, I appreciate it. Okay, so let me look at listener questions and comments. So the bottom line, guys, is Trump is very worried about the dollar, and the dollar index is not really a problem. The dollar index is at 98.24, the regular dollar index, and that's against the G6 and the G7. And the regular dollar index has had real problems staying above 98. It really hasn't stayed above 98 for long. It's had a lot of false breakouts, but it looks like the trade-weighted dollar is going to be a very big issue, and that means emerging markets are getting absolutely clobbered. And not only emerging markets are getting like the triple whammy because they have a really bad combination of, it's like a perfect storm of bad news. So you have bear markets in oil and base metals for emerging markets who are a lot of commodities producers. You have China slowing down. You have enormous net capital outflows out of emerging markets. And then you have the trade-weighted dollar index rising and the dollar-denominated debt. And the global economy slowing down. And when you combine all of those things together, the emerging markets are looking a lot like subprime was, and derivatives attached to subprime was in 2007 and 8. And eventually, that will come back. Eventually, the pain will start to come back to the U.S. because this is a global economy and everything is connected. But it looks like emerging markets are going to take the most pain first. That would be my educated guess for now. Yeah, if you guys could just hit that on their channel, it'd take like a couple minutes to do this. You just hit that. There's like a flag button, and you just report copyright infringement. It's just ridiculous. They're stealing my stuff. I appreciate it. Thank you very much if you do it. I'll have to look up the exact channel name. It's labeled Economic Times on the outside, but there's a different URL. Henry brings up the Triffin dilemma. Henry, gold would solve this. Gold used to solve trade deficits. Gold used to fix balance of trade problems. These stupid modern economists, neo-Keynesians, monetarists, and people who believe in mercantilism and neo-mercantilism hate gold, but the truth is gold worked the best for facilitating global trade. You can go back through financial history and study it. The economists in power I don't think there'll be a new gold standard. I think everything else will be tried first, including cashless society and really bad negative interest rates. Full digital money, banning cash. There's an IMF paper that came out a couple months ago. It's on the IMF website. It's for free. David McIlvaney at the McIlvaney Weekly Commentary has been talking about it a lot. I think it's 80 pages. And they're talking about how society in the next crisis to accelerate a quote-unquote recovery, in air quotes, should go full cashless society and very, very punitive negative interest rates. And then if you're a content creator like me and you're a rabble-rouser and you criticize all governments, then I'm in danger of them shutting off my bank accounts, shutting off credit cards, all those things. And then I won't be able to afford food to eat. That's probably part of the plan. Similar, it's once you go full digital, it's really, really easy then to implement China's social credit score in all these governments. Really, really easy. And that's one of the main reasons of the social credit score system, is they literally track all your purchases. So if you're buying, like, if you're in mainland China and you're buying like American goods, or you're subscribing to Real Vision Television or American media, or you're buying pornography, American pornography, you get flagged. Or if you're paying on your credit card for a VPN, you get flagged. So that's, I hope I'm wrong about this, guys, but I think it's coming to the US sooner than you think. Probably within a couple years after the next major financial crisis, probably under 5 years. And Christine Lagarde, who's now the new head of the European Central Bank, she was at the IMF, remember? And she is big into cashless society. Negative interest rates, cashless society, that's one of the things she really likes. Thank you, Wendy, for the kind words. I appreciate it. Are you talking about Tim Cook or Tim Apple? Was that a joke? That was Trump who said Tim Apple? Hey, Sean, a lot of hedge fund managers are calling this a dollar shortage. I would just say it was the bets from these emerging market businesses, emerging market banks, emerging market private corporations, emerging market governments. They were betting on a weak dollar, and that's not what has happened. Now, China is a different situation than some emerging markets. China, I don't think, has the $3 trillion reserves that they claim. And if they do have the $3 trillion, it's already spoken for or tied up in a lot of things like Belt and Road Initiative, or it's in their sovereign wealth funds as collateral and not easy liquid. And I think that's why China has been liquidating treasuries. They need those dollars for things to pay for. They have responsibilities they have to pay for. MLYT, I can't pronounce it, says pitchforks and torches are coming with it. Exactly. Well, why do you think there's so many protesters in Hong Kong? There's the French protesters. There's a lot of protests. Unfortunately, a lot of people are blaming capitalism for what central banks and governments have created. There's no bankruptcy. There's no failure, but capitalism is still being blamed for everything. Sean, if you talk to Kyle Bass, he thinks that China has way less than $2 trillion in reserves. And my friend Daniel Akaye, he thinks that China, if they do have $3 trillion in reserves, they're already spoken for, and a lot of it's not liquid, and they can't liquidate it to pay for emergencies. That is already tied up as collateral and already promised to pay for a bunch of things, including 5G, rollout in other countries, in China and other countries, and then also Belt Road Initiative. Why will the Fed need real-time payment system for blockchain? Because then if you make a purchase on your credit card or bank statement that is flagged, that is looked at as a rabble-rouser or viewed as a threat to the government or a threat to the mainstream media or something, you can be flagged and get credit points, or you get a knock on your door or something. Yeah, thank you, Mind Stuff, for reminding people to hit the like button. And thank you very much to my Patreon account contributors. I have over 100 already. It's really good. Made enormous progress in the last two and a half months. I think eventually there will be a version. So I know this because there are a lot of the Davos elites from the US and Europe, and they were like applauding the elites out of China, asking them questions about the social credit score and how they can implement it here in the US. That's been talked about at Davos for a couple years now. So eventually there will be a social credit score rollout here in the West. I don't know exactly when. They're probably waiting for a crisis. and then they're going to start implementing really draconian, even more totalitarian measures than now. China has sold U.S. treasuries. That's why Japan has more treasuries than China. China has sold at least a couple $100 billion worth of treasuries already. They're not going to crash the dollar, though. I just told you what the dollar is doing. Okay, I see literally every day all over the media, whether it's on oil websites, mainstream media, Bloomberg, Gold Community, alternative media, I see tons and tons of articles about crashing the dollar. And guess what? China has been selling treasuries. Russia sold all their treasuries and did not crash the dollar. China sold hundreds of billions of dollars in their treasuries and did not crash the dollar. In fact, the trade-weighted dollar index is at an all-time high and threatening to break above 130. I'm looking at listener questions and comments. Is this the milkshake theory? It is part of it, but we have not had, other than the trade-weighted dollar index. So the trade-weighted dollar index, if it were to say break out way above 130, say to 135-ish or higher, that would be part of the milkshake theory. And the milkshake theory for Brent Johnson, who I interviewed 2 months ago, you can go back in the archive. If you're new to this channel, I have a lot of new subscribers. I think almost 2,000 new ones in just the last month or so. And if you're new to this channel, you can go back in the archives. And I'm friends with Brent Johnson. I've interviewed him a number of times over the years, but I interviewed him 2 months ago about this. And he says he has not been proven right yet. So the dollar index has not broken out. The dollar index, the regular dollar index, which is DXY, has failed to stay above 98. So he said he would need, for confirmation of the milkshake theory, he would need the dollar index to go way above 98, probably above 102 or 103, and stay there for a while. And then also more net capital outflows out of Europe and out of China and emerging markets, and to head here into the US. And that would be similar to what Martin Armstrong is predicting, with like 36,000 Dow. And also the Ludwig von Mises crack-up boom, where the real economy is actually getting worse, but the capital markets, the asset prices are actually soaring. So the divorce from reality would actually be even larger than now. And yes, it could happen, because it's happened in the past. From 1927 to 1929, that exact same thing happened. That's what led to the blow-off top and the Black Tuesday, October 29th, 1929 crash. I think Australia is a mess, Sean. I think a lot of games are being played in Australia to try to delay a collapse. I would not be surprised, Sean. I don't have any proof of this. Maybe a whistleblower will eventually leak something. I have no proof of this. This is an educated guess, but I would not be surprised if the Reserve Bank of Australia, their central bank, already has swap lines, currency swap lines open with the Federal Reserve, anticipating a massive bust in the real estate market, their banks, etc. We're at this point now, guys, and there's no transparency. These central banks are almost all of them are enormous liars. Occasionally you get a central banker to come out and tell the truth, but it's normally only half truths or partial truths, or a little nugget of truth here or there. It's very rare that a central banker is candid. Even these retired central bankers like Mervyn King and some of these other guys, and Greenspan, they're normally like lying or spinning or partial truths. But Cyber says we already have a cashless society. Less than 1% use cash and it doesn't work. Yeah, but people still have the option of using cash at most places. No, I'm talking total cash ban. And then you're looked at as a criminal. And then this way, Cyber, any purchase can be, you can put a VAT tax on it. If you speak out against, if you criticize the government or you criticize the wrong people, they can shut down your bank account or credit cards in 10 minutes. Or at most an hour, or they could put an extra tax on you. They could put an extra tax on me. They could put an extra tax on other people that think like me. It's not full cashless cyber right now. Okay, people opt to use a debit card or credit card because it's easier. They don't want to carry as much cash, but you still can bring cash with you. No, I'm talking, yeah, Sean is right. Real draconian, they put you in jail. So you get 5 years in jail, 10 years in jail. You get looked at as a criminal for pulling out cash. Yep. Yeah. If you have social credit score and you tries to use cash, they could either label you a criminal or you could get a big ding on your social credit score. I think that could be coming. Wow, we now have over 300 people listening to this live stream. A record. Yeah, I'm against civil asset forfeiture. It's a big problem here in the US. It's a real big problem. That's civil asset forfeiture, Grizzly. If you're in real estate, you get a tax cut. I'm not sure what you mean, Mark. No, I think property, I don't know if you meant if you're a real estate agent or if you own real estate, because if you own real estate here in the United States, I mean, I know a lot of real estate investors. I know my best friend's a really good real estate agent here in the DC metro area. So if you guys are interested in buying property, he's one of the best. And he also works for one of the best firms. But property taxes are going up. It's pretty much across the board. These state and local governments, that's like one of their main sources of revenues, property taxes, and they are looking for new ways to raise them. You can't have cash in a negative interest rate environment. This is assumed, so they're going to try to ring fence people into banks in a negative interest rate environment, and people are going to get docked. Negative interest rates will make the economy worse. These academic eggheads, these PhD economists, really know bad theory. I mean, look at all the damage to all these different entities that negative interest rates has done in the European Union. And still these stupid academics are adamant it will work if they only go further negative. It is so dumb. They'll break insurance companies. They'll hurt pension funds. They're going to kill savers even more than now. It's just ridiculous. But I think then people will get creative. Did you hear what people in Argentina are? Did you hear what people in Argentina are doing? They have U.S. dollars and they're stuffing them under their mattress. They will not go to the banks. Did you hear about that? That is fucking brilliant. Oh, drop the F-bomb there. That is, so there are unintended consequences to stupid policy actions by bankers and politicians and governments. And one of those is people will not do what the always do what the government wants them to do. Okay, so if you're going to get taxed at a bank, it's going to actually accelerate bank runs. The people in power probably think that it won't. If they're going to tax you for keeping cash at a bank, why not keep cash at a stock brokerage or gold money? It's not a bank. So they don't have to charge you negative rates. Keep your cash then in a stock brokerage account like an Interactive Brokers or an E-Trade or TD Ameritrade or Charles Schwab or gold money. It's not a bank. There's tons of other ways people are going to figure out around this, or people are not going to put cash in a bank at all. It's going to be in what'll just happen. And I've heard that the rich people are planning this for negative interest rates. Is what you'll have a non-bank entity. You'll have rich people then, either entrepreneurs for rich people. You'll have someone buy enormous warehouses, buy armed guards, buy safes, and it will be a non-bank cash storage facility. So it won't be a bank. They'll charge you a low flat rate. There won't be negative interest rates, and people will just store their cash there. And you can go in and out. So it'll be a non-bank bank that doesn't charge negative rates. I've heard that that's already being planned by the rich people who have a lot of cash and want it out of banks in Europe. Yeah, I don't think the Fed will do a 100 basis point cut immediately, but it looks like the Fed is going to do at least one more 25 basis point cut in September or October. But my point is that people will figure ways around the government laws. They're not going to do everything the governments want. Now, there will be some brainwashed people that will do everything the governments want, and then if the government puts in like a reward for tattletaling or turning in people, yes, some people will do that. In a crisis scenario, there have been rapid rate cuts. However, technically, the U.S. is not in a recession yet. The U.S. is still technically positive GDP growth and positive expansion. We're over 120 months of positive economic expansion according to the official U.S. government statistics. So technically, the U.S. is not in a recession. This was that rate cut that was done last month at the end of July. That was the first time in history, I believe, in the U.S. history, that a rate cut was done without an official recession. So the rate cut was done while the economy, according to the government economic data, was still expanding. Where to get income? People are going to have to be entrepreneurial. They're going to have to hustle. You're going to have a side business or a side hustle. In online business, you're going to have to be able to interact with family and friends and come up with new ways to replace your lost income from currency debasement and taxes. This is stuff that people in the gold community are not talking about. The solution, most people I speak to need more income. The solution is to not put all of your savings into gold or silver. Most people need more income and more cash flow. So if you put all your savings into gold and silver and you don't grow a side business, side hustle, you don't have extra income coming in, your standard of living is going to be offset despite the gold and silver. And yes, it's important to have gold and silver. But if you put everything into gold and silver and you don't know how to grow your income and have a side business, your standard of living is still going to be cut. Well, I think most people should probably have a side business, a side hustle. There's not, in the regular stock markets and stuff, there's not great investment opportunities there. The gold and silver stocks, some of them are good buys right now. Not financial advice, just my opinion. Almost 350 people watching this live stream show. Pretty good. Everyone's standard of living is going to be, over time, with the real inflation rates, according to the Chapwood Inflation Index here in the U.S., their standard of living is going to be cut in half like every 7 years, 5 to 7 years, depending upon which city you live in. So everyone, unless you're at a job or you own your own business where you can dramatically grow your revenues and income, you're going to need like a side hustle or an online business. You're going to have to figure out a way to pool your skills with friends and family members or other people you meet online to make additional income. Otherwise, your standard of living is going to be cut in half. Okay, guys, well, I'm getting tired here. We're almost at 40 minutes. We've only gotten a couple super chats. Thank you, though, for the 3 super chats. I appreciate it. And I'll put links to some of these stories here with the President Trump tweets and the Australia Reserve Bank. Bottom line is, all these governments are worried. The game, they're all trying to do pretty much the same thing. Rate cuts, one variation or another of QE. No one wants a strong currency, but a stronger dollar does the most damage. And the trade-weighted dollar index, which hardly anyone in the gold community and the alternative media talks about. They talk about the dollar index, but you have to also look at the trade-weighted dollar index. And the trade-weighted dollar index is saying that the trade-weighted dollar index is at an all-time high, according to the chart I'm looking at 129.9088, and it's about to break up. It's about to go even higher, which I think is why Trump tweeted. Thank you, Grace, for the $10 super chat. I appreciate it. And I'll attach a link if you want to monitor the trade weighted dollar index. If you don't want to do the search on your own, I'll attach a link to the website so you can keep tabs on it. But I can guarantee you that the Federal Reserve is looking at both dollar indexes, and it is a tightrope. It is a losing effort that they're putting forth, and they're trying to walk two tightropes, basically, with the regular dollar index and the trade-weighted dollar index. And my guess is that they're going to not be able to help the emerging markets as much as they think. Okay, guys, bye for now.